Hey guys, Mike here. So obviously another volatile day in the stock market. What is new? I think we're getting used to that by now. But in today's video, I want to do something a little different. I'm one of these guys, I like to look behind the curtain on things and understand why something is being done or why is something happening, more the root cause, so to speak. And so have you ever asked yourself, well, really truly, why has the S&P and NASDAQ and all these indexes just absolutely skyrocketed, starting in the 80s and then the 90s it went up even more. But like every decade it just ramps up even higher and higher. Like, why is that? Like, what's happening? Okay, and so I'm going to show you exactly why that is actually happening. Like, look behind the curtain, but then more importantly, dig down to the root cause of like what's happening. What is our government not telling us? And I'm going to tell you what they're not telling you. Okay, and this is an open up a good debate. I love a good debate, but it just makes sense to me. I'm a numbers guy, and I look at this. This is the reason why this has happened pretty much my whole lifetime almost. And what does it mean for us in the long run, right? And here's what I'm talking about with the S&P chart, right? I mean, you look at it, it's nice and smooth going across from the 60s to the 70s. Now all of a sudden the 80s starts to take off, and then the 90s explodes, and then we have these huge crashes happen right here, and then just boom, absolute explosion after '08, right? I mean, look at that. That's a roller coaster, right? And so then I noticed this. You look over at the national debts chart, and you look at this right here. This is the U.S. national debt. What happened? Nice and smooth in the 60s to 70s, starts to go up in the 80s, explode in the 90s, and then just go on steroids after '08, right? And you think, well, that's kind of strange. And again, you look at them again. There's S&P, and then we flip right over to the national debt, and you go, those look really similar, don't they? Besides the crashes, because the national debt never comes down. And of course, what does that lead us to? It doesn't matter who's in control of the government, what party you actually love more than anything else. All of them run up deficits, right? So these are the deficits, right? And so doesn't matter what party's in charge, deficits are huge, especially when you see us coming out of crashes, right? So they start spending a lot more than they're taking in, of course. And then you see the Fed, they do their shenanigans, and boom, you see that their balance sheet just absolutely explodes, almost $9 trillion. And then, of course, what do? We take on a lot of debt. This came out last month. We're at around $16 trillion. About $4.5 trillion of that is, you'll see, credit cards and auto loans, student loans, that kind of stuff. And so you can see going from '03 to now, we've taken our personal debt from around $7 trillion to $16 trillion. And you can see right there, and just look at student loans for a second there. If you don't think student loans are a problem, it's increased. That debt right there has increased much faster than any other debt, okay, since 2003. Then look at auto loans. I guess we really started driving some nice cars, didn't we? But of course, what else did we start doing? Since our government's doing it, why not us? We started taking on more and more leverage. And if we draw this trend line, you'll see right here, taking out all the crashes and corrections, you can see it just steadily has been increasing. This is in billions, by the way. And then you look at the tops. Look at those peaks. Everything is going up. More and more risk. More and more risk. Let's take it on, which is why you see these huge swings down when it happens. These huge crashes when things go bad, okay? Because everything is so leveraged to the hilt. And so now, of course, what's the root cause? Like, what does our government not tell us? Why all of a sudden you see them just taking on massive amounts of debt, okay? And then they encourage us to do the same, right? So we take on debt. We take on leverage. All this stuff. Like, why would this happen starting in basically late 70s, 80s, 90s? What happened? Okay. And this is what I truly believe. I've never heard the government talk about this, right? I don't think they'll talk about it. They have these numbers, right? And I think politicians a long time ago, what they looked at was, and they got projections for this, simple. They looked at the population growth, right? I mean, look at this right here. This is the United States growth rate from the 50s on into 2022, I believe it is. The most recent one I could find. And look at how much it declined, right? And then look what happened in 2000. Fell off a cliff, all right? And so, and of course now I know you're asking, wait a minute, the population keeps growing. Yes, the number keeps getting larger and larger, of course, but look at that curve, okay? It's growing at a percentage much slower than it was before. And don't forget to hit that like and subscribe button, guys, if you get something out of this. And you don't even need a chart for me to show you that. I mean, just look at your family. One grandmother had 6 kids, one had 10. My mom had 2, I had 1, my brother had 2. Okay, people are having a lot less kids over the last 20, 30 years. And so, of course, if you're with the government and okay, there's not going to be as many future taxpayers out there. That means there's not going to be as many future spenders out there. What do we have to do? We have to fill that gap, right? We have to be the one to push this up. So what are we going to do? We're going to start forget a balanced budget. That actually ended, I think it was 2001, the last one we had. They're going to start spending more like they did in the 80s and 90s, start getting bigger government, right? And then all of a sudden, 21st century hits, and they just go parabolic with it, right? Forget balanced budgets, just start spending, because we can print as much money as we want to print, all that fun stuff. And the Fed starts getting involved when we start crashing and burning. They start growing their balance sheet, right? And this is why, another reason why you see the government has never encouraged you to save money, ever. They encourage you to spend. As a matter of fact, multiple presidents have said that. Like, get out there and spend, come on. You know, because that's what our economy is based on. That's what's pushed it off. And all of a sudden, also, you know, they got a lot of their money in the market as well. So why not? And that's why you see a huge, wealth shift over the last 20 years. And what's even more important to look at here is what's happened to earnings since the 70s as well. And this will show you another reason they knew they had to get involved here. As you can see right here, since the 21st century, 90th percentile of earners, boom, earnings going up. 70th percentile, earnings going up a lot. Look what happens down here though, the median and below. It's basically just been flat, right? You've heard the Fed president talk about this multiple times, and this chart says it all. Look, from 1942 to 1973, how much hourly compensation went up compared to productivity, and then look what happened in 1973, which, if you remember any of the charts I just showed you, is when you start seeing the debt actually start to move, population growth start to slow. Look what happened to earnings. Hourly compensation only up 9.2%, while productivity was up 74.4%. So now you have a population growth slowing. You have hourly compensation going like this, flattening out. It's been like that for years, right? And isn't it coincidental, by the way, that in the same 70s, that's when CEO pay and executive pay started skyrocketing. It used to be like 120 times what a normal person made or whatever it was. And now I showed you where it's like between 2,000 and 4,000 times what the regular hourly person makes. And so you have this happening. So they know that's not going to be good. And so somebody has to make up for it. That's where the government comes in at, right? That's where the Fed comes in at, right? That's where credit cards and everything else, us running up all this debt to be able to spend comes in at, right? And then, of course, hey, why not? Let's move the market even higher. Here comes the leverage. Let's really lever it up. Forget 2x. Let's go 3x, 4x, 5x, 20x it. Let's do this, all right? Which is why you see the volatility since 2008, somewhere in 2007, just be through the roof, right? Especially almost after 28 actually. But yeah, a lot more volatility, right? Because there's so much more debt, so much more leverage in the system now. And what all of this has done, right, is all this debt, all this big Fed balance sheet, all this stuff has made it to where that's why you hear them talking about the Fed being trapped. They're screwed, or we're screwed actually, because they can't do as much now as they used to be able to do. Because as you can see, this is the Fed's fund rate and the debt. So what's happened, right? We used to be able to get over 2.5% easy way back in the day, but not anymore, because as that debt went up, they had to service that debt, right? Remember, every 1% up on rates uses around $300 billion extra in interest on top of what we're paying now. Okay, and for them, at least they can print all their money. The riskier debt is our debt because we can't print money, right? So that's why everybody fears a big recession again. I mean, totally fears it. It's like one of those things, because if we have like a huge recession, which I can't imagine. I mean, who knows if we're going to have one? But I can't imagine why with all the money out there. But anyway, everybody fears the next big one. Now, eventually there will be a big recession. It just happens. And there will be one. And the reason why everybody fears it, not so much for the government debt, it has to do with the personal debt, how much has increased, right? So what happens in recessions, people lose jobs. So you have no way to pay your bills, right? And there's so much more debt out there and so much more leverage in the market. That's why you hear the Michael Burry and all these guys talk about it. Eventually they'll be right, by the way. But when it happens, everybody knows it's going to be just a huge, house of cards just crashing down around us, right? And unfortunately, the Fed and the government, the more they keep running their balance sheets up and everything like that, it just makes it less they can actually do for us. That's where the real problem comes in at, right? And you can just see, I mean, look at this right here. You tell me how sustainable this is. This is the debt and the S&P. Look, going hand in hand. And if you do something even funny, you add in the Fed's balance sheet, right? I couldn't even get it to look right because it's gone up so much since '08, for crying out loud. But I mean, look at that. You're telling me that's a strong stock market, we have a strong economy? No, we have a government that likes to run up a lot of debt, right? And that's what's pushing the market up right now and trying to hold it up. Of course, what's fixing to happen to the Fed balance sheet? It's going to be coming down, supposedly, because looking at the chart right there, you can see they're pushing the stock market up, right? With all this debt, with all the Fed balance sheet running it up. And so when you're talking about shrinking stuff and taking stimulus out of the market, you know, it freaks people out, freaks the institutions out, right? But understand the mindset, if you look at any of those charts, why things are so different now is because Wall Street knows, hey, sure, we may start crashing, but eventually the government's going to step in, right? They call it the Fed put. Right now, the Fed's like, oh, we got to get this inflation under control. We haven't had that in many of these people's lifetimes, including mine, right? And so that's where all this uncertainty is like, oh my God, like if we start to head down, are they going to be able to step in, right? And if you look at those charts, you can see they're kind of limited to what they can do, right? And so the only thing they can really do is take us back to zero interest rates. But then, of course, what happens to inflation? That's a whole nother problem. And so, this is why I say it's such an interesting time. And we will remember for the rest of our lives. And they will write books about this. I'm telling you right now. And so, again, I like to look behind the curtain and see what's going on. And I just found when I came across this, I thought, this looks pretty interesting. So, I can sit there and report on a volatile market every single day. If there's anything to report, but I don't want to do that every day. Sometimes I just like to bring out videos like this and actually, I don't know, learn something new and stuff and start a good debate. So if you got a different reason why, put it down in the bottom. Let me know. But hopefully you got something out of it. Let me know in the comments, okay? Hit the like and subscribe button if you did. And I'll see you guys later.